The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. I was fortunate enough to do the show with Tommy Jr. at 10 o'clock because Tom's at the show, the money show. It's at the Marriott, if I remember correctly, Marriott in Manhattan, right by 42nd Street, Marriott Marquis. That's it. So if you're in town and you want to go see him, this is a great time. So what we're looking at here is the Dow is up 260 points at 25,570. Let me just get out of this. I had Apple up. What's really important, what I've been saying to subscribers, is that what we're looking for is a test in the 25,000, the high 25,500s to the 25,620s. That's kind of the area where if there's going to be a failure, that's about where you'd expect it. But so far, we're above this downtrend line. This is a Chapman wave falling axe formation. This is a declining cone with lower highs and much lower lows. And having gone from 26,616, 12% correction down to 23,360 on the 9th of February, there's a pretty decent bounce. It isn't a left side, right side price time match because it only took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sessions to come down those 3,300 points. But instead, what we've done is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're already at 10, and we're at about a 60% retracement, 61% retracement. Now, what's going to be very interesting is this is a leg C. I should call it a gray C. Let me call it a gray C. But because the stochastic's running quite strong and the MACD is good, I'm going to give it the benefit of the doubt at the close today. If we close above 25,560, my thinking is that I'm probably going to put an up arrow in and suggest that there will be a gray leg D. That'll make it a blue because it's a full buy mode. Buy modes in the Chapman wave go to Ds, even if they're under the previous high. But if you get to D under the previous high, it's going to make it much tougher to get there. That's the way I look at these things. So the weekly chart is now finally in a single gray leg A to the upside. Put that in over there and make it gray so you know what I'm talking about. Gray means that it's under the previous high with a long way to go. So it could fail at any point. That's all it's saying. It doesn't say it must fail. It doesn't say it is going to fail. It says once you're underneath the previous high, shorter time frames could take precedent until the technicals really improve. And the technicals, the stochastics actually turned up, but it's still only at 54%. In the weekly chart, MACD is still quite negative. You have gone in the 120-minute chart. Let me show you something interesting. This is the Dow that I'll show my subscribers and discuss in great detail every single day, especially over the weekends. Spend a lot of time in the different charts. You can see that this one-to-one expansion says, if this truly is a falling axe formation, you could have a bounce of, and let me show you right here, this move to the upside could be replicated. I usually am very conservative, and I go from the low that was made, and it would be this low here. And it says that you could see a rally to the 26,900s, 920 actually, if there's a one-to-one to the upside. That would take you way over the high that was made on the 26th of January at 26,616. I don't do that. I just go step by step. We are long. We're trying to add longs. We have only one short. It's a home builder, and it's acting very poorly. In fact, it's even down today when the Dow's up 271 at 25,580. The S&P is up 19 at 2766. So all of this says that the sectors that are weak right now, don't try to nab them. Don't try to get in and be too clever. The 120-minute chart is in leg C to the upside. Chapman wave 3 hasn't made the 4 down yet. There's still 4 to come, and then a 5 at least. The 120-minute chart, very positive breakout. Chapman wave, left side, right side, price, time match. When it takes out the left side high, in this case 25,432, and it's only in a leg. So this is not an overlapping wave. This has to be considered leg D now. I did say that that was a C, but no, it's actually a leg D. Remove. You have to be conservative in this case. So that's a D, still acting very nicely. This is going to be a change right there. Okay, so it's a D. And the MACD is very strong. Stochastics at 95%. I see no reason why we shouldn't see an E and maybe even an F to the upside. All right, now let's go back to our story. That was the 120-minute chart. Here's the Dow that I showed you a moment ago. This is in greater detail. Look, the MACD is very strong. It's now positive. The histogram is positive. The stochastic is improving. It's at 68%. Now it's kind of good. I would prefer to see it right now at 78%. But so far, everything's lining up for a further extension to the upside. Let's look at the QQQ. Let's look at the S&P. SPX.X. S&P is up 21 at in leg C, also broken out from the resistance level. And here the stochastic's better. It's at 70%. Nice action. Weekly charts, the real thing that I'm looking at here. This is perhaps a V-shaped pattern. If you want to see a real V-shaped pattern, look at this. Apple with Buffett wanting to buy or buying. It's up 3 at 179.12. 180.10 was the all-time high. Peak E daily, peak F with a sharp pullback from the 180 level to 150, 30 points. I would say, what is that, 18% correction. And now what we're looking at, the NASDAQ had an 18% correction. Looks to me like Apple still remains a strong stock. So I want to go to the QQQ. The QQQ is acting very well. It's in leg C. Left side, right side, price time match says within 2 days we should hit the 170.95 area. MACD and stochastic are confirming in the daily. The weekly has finally improved a little bit in the MACD, and the stochastic's running. It's at 67%. This looks like it's going to try to attempt the 170.95 area this week. And what we're looking at is the IWM. That's very interesting because the IWM, the Dow's up 1.09%. The S&P is up 0.74%. The IWM is only up 0.24. So this is a very select rally. If you go to the left side high of 154.81 on the 21st in leg C, peak C actually, gray peak C, 154.81. Today's high is 154.82. So we have squeaked by the hair of the chinny chin chin right there to a leg D. Not very good action. I have to actually put an up arrow in because it's made the D, but it's very poor action. So there's a divergence between the different indices. Question of the day, will I look at GE? Yeah, a lot of people over the last 3 weeks have been talking to me about GE. There are some people I know that have that as part of the pension plan when they work for GE, have worked and are still, some are still working for GE for a long time. I will look at that. I have some ideas. Let's just go to the gold as we go to the first break. Gold is up to at 30.32. I don't think gold is acting all that well. The dollar, in fact, is holding very well. Not breaking out, it's just holding very well. So I don't see gold breaking down here. I don't see gold dollar breaking out. So we'll talk about them when we get back. Basil Chapman, Tiger, Mr. Zauer, a bunch of questions came in about Ford and GBTC.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we're looking at the dollar. Dollar's at 89.88 unchanged. It's holding the 9-period moving average. It doesn't really look great. It's starting to improve a little bit technically in the weekly. Monthly chart, yeah, it's a green candle with a couple of days to go. Doesn't mean a thing to me until the dollar is at 91.75, 92.30. It's just chop, chop, chop. It will improve a lot if it can actually go to 90.80 in the next few days. Meantime, it's both gold stuck in a range and dollar stuck in a range. If you look at the EUR, USD, look at this. Under the 9-period moving average, made a peak D in the Chapman wave. That's where you got to be careful. Fourth highest peak at 1.2255. 2 weeks ago, and now it's trading down. 1.224 is the 9-period moving average support in the weekly chart. Technicals are poor. Yeah, I just don't see anything just yet. USD JPY trying to rally until it gets to the one. I've said for a long time, I'm really not interested in even looking at this as a potential trade until I can see it trading in the 109.50s to 110.30 area. Just 109.30 is the 200-period exponential moving average. 108.76 in the weekly chart. 108.76 here in the middle. That's the weekly chart. Monthly chart. Look at that H pattern. It's not very good. So let's go to high-grade copper, HG. High-grade copper is pulled back. It's up 0.01. It had a little bit of an early morning rally. It's struggling. It's just in a trading range. So copper under 3.20, you say, uh-oh, be careful. Above 3.26, you say, nice action. So until those ranges are broken, either way, we'll see what happens. Now, this is going to be very interesting because if you look at the TBT, look, TBT, inverse of the TLT, this is Lehman 20 and T-bond fund. This is the inverse. This is the ultra short Lehman T-bond. What is it? What's the exact name? I should remember after all these years. Ultra short Lehman 20-year Treasury bond ETF. Ultra short. Made a peak D. The TLT, right there at that resistance. So this is what I had. Left side, right side price time match. Look. Right there's a Chapman wave technique, which we always study, and I show in my newsletter every day. There are charts that have this kind of pattern. It went right to the level that we were looking at, which was a test of 39.28 and I anticipated it based on this. Oh, it was, yep, right on the weekly chart. The week of the 16th, it was supposed to get there, and it went to 39.23. And then it popped up once last week above it, and now it's below it. So it's accomplished everything it needs to, and it's in leg C. And that leg C rhymes in times with the TYX .x, which is in leg C right now. And that suggests that the TYX 30-year T-bond yield should, in fact, go to a leg D. It's in a buy mode. It should go to a leg D, although the TNX, the 10-year and the 5-year have gone to leg Ds. This is only in leg C. So it's suggesting that the 30-year could still go higher. But in the meantime, I think we're in for a shorter-term consolidation. We'll see what happens. TBT parameters, TLT right now should be bouncing nicely. It did bounce, giving back some. It's up 19 cents at 118.32. I don't see it going too far. 119, maybe touches 120, and then I think it starts to pull back as yields go higher. So I think I've done everything except I haven't done crude oil. Crude oil right now is trading at up 60 cents to 64.16. This is the area, like the Dow, has a certain area where I've been looking for to see how it breaks out above it or it gets repelled. Now what we're looking at is a trendline resistance in the crude oil, and that says 64.70s will be the very strong resistance. So far it's in leg C, the technicals are good, seems to want to go higher. I'm watching this closely, but the parameters that I was looking at have been broken to the upside. I said 63s might be 62.80 to 63.30. It's way above that. It's at 64.14. So it is going higher. But remember, I said as a short, it was only a quick trade short because I would not be short crude oil. I think there's internal strength to crude oil, which takes me to the UNG, which is trading up 10 cents at 22.32, United States natural gas. It just is a mystery to me. This is the period it should have been doing well. I think there's a glut of natural gas. So all I can say is that at 22.31, UNG, United States Natural Gas Fund, has strong resistance in the 22.80s to 23.10s. If it gets to 23.80, something else is going on. It could move even higher. But so far, it's just a chop trading range sideways move. I was asked about GE. A lot of people have asked me about GE. So let's do this. GE is trading at 14.21, down 28 cents. The question has been for a long time, should I dump GE or should I hold on for the ride? Will it ever come back? Well, I was thinking about this in terms of what I like to do is kind of the socioeconomic, political aspect of many things. And if I do it on GE, what I'm really looking at right now is GE moves its headquarters from a kind of an anonymous place in Connecticut to Boston, right at the height of the price, the height of the change in dynamics of Lower Boston, that is the Boston Harbor area, where properties that were just dormant, you could pick them up for practically nothing, are going for unbelievable sums of money. There are skyscrapers being built, and there's a whole area on the waterfront that is being developed near the World Trade Center. It's changed Boston, and with new companies wanting to come in, I'm looking at this and I'm saying, good grief, this is like you go to a bar and they're mostly millennials, and there's this old fogey. I don't want to give an age because old fogies could get upset. But there's this old fogey, and he's talking about, Boston in the old days. And the millennials have no clue as to what he's talking about. He's just out of touch. He's in the wrong place at the wrong time. That's General Electric. Moves to Boston, pays an exorbitant amount. Immilton was the worst CEO. I spoke about this. I remember the day I saw him interviewed with Wells, 2001 or something, and he said, I'm gonna continue your effort and make this one of the greatest companies. I'm saying to myself, greatest companies? I'm gonna major sell signal here. I wonder what he's gonna do. And he made every mistake in the book. And now he's the head of, what is he the head of? Athena Health, ATHN. Boy, Athena Health, good luck to you. although Bush, the guy that's the head of, or the CEO, he knows how to talk a good game. And but I don't know, Athena Health trading at 140. All right, we'll make a note here. So somewhere around here at 140, in the 140s, email joined in. Woo! Good luck to Athena Health. So GE, trading at 14.22. So over a long period now, what I've said to people who have asked me about GE, I said, you know, GE is one of the former great companies. They seem to have done everything wrong. If you're a buy and hold person, it's going to be very awkward. This was in the 22-23 area. If it goes into the teens, you're going to say, oh, it's too late to sell. But it can go lower. So I'm very concerned. I would lighten up as much as I could, is what I said to them. And then the new question I had was what to do. I'll come back.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the question is, what do we do now? Those are the people who have GE. And if I show you this chart, look at it. I'm going to squeeze this again a little bit more. And now look at this. This is a chart of GE. 60.75 in August of 2000. Somewhere in here, I remember, I'm just in my mind, I'm visualizing exactly how I was sitting and listening and writing down what the email said. I actually typed it into the chart. I probably have the chart somewhere, but this is not the chart that I was looking at. So what do I do now at the 14.20? Well, 14.02 was the low that was made in October of 2011. So you go from August of 2000, 60.75 down to the low of 21.40 in 2002. And then you rally up to the high of 42.15. That was in October of 2007. And then in March of 2009, at the low, at 5.73, it makes this low and runs up to the most recent high, 33 round number high. I believe that was it. 31, 32, 30, where there is 33 in July 2016, round number high, and now you're cut in half. You're down to 14.21. My biggest concern is that when a market is in distress, and this is what's happening to GE, every time you look back at the monthly chart, you say, oh, you know, it's like buying Apple or Netflix or Nvidia. Every time they move up, you say, oh, I could have bought it anywhere. Even this last month, I could have bought it because it's close to the highs. Here it's the exact opposite. Every time you could have sold it, and now it's lower. So I'm going to make the suggestion, lighten up on GE, but the way to do it is, you know, you could take 28 cents down today, somewhere in this 14 area, the 1402 area should try to find some support. Take some of that money and try to find a stock that is in, say, the steel sector or the maybe even aluminum, but or even the perhaps in the infrastructure area. Take some of that money and put it to work in an area that has potential for the upside. It's been working, had a little bit of a pullback, giving you an opportunity to get in. And that means at least, even if it pops up 8%, it's better 8% up than a daily few percent down. So that says I can now stop worrying about GE because I've got something else that's perhaps ameliorating some of that downside. And then what I would do is I would say the 14.02 better work as support, because if it takes it out and goes to the 13s, I'm not sure what you're looking at, because there might have to be a whole restructuring. And then the next thing you know is you get out, and it's 2 days before the new CEO announces that he's going to break up GE, and each part suddenly looks like it's worth a bundle, and it has this big rally. So I'm saying you don't have to get rid of all of it, because you don't know when that announcement's going to be made, and that announcement could give you a good couple of points to the upside. But I would use that as an opportunity to raise my stop, and the next time it hits that stop, I am done with GE, and you can rethink it. The other thing is to say I'm taking some of the money, or at least 2/3 of the money. I mean, you can take all of it, but I'm going into an area that is a potential 2018 area of positive dynamics. There could be talk about infrastructure once again. I'm not sure when it'll be. It doesn't seem to be on the table right now. But as soon as it is, those are the stocks. Grab a price that's in the 14 area and just trade. You're going from GE in the 14s to something else, maybe a double because it's at 7, or half because it's at 20. But it's one of the stocks that has the potential to do really well in this environment. And in my newsletter, we've picked out a couple of those, and we either trying to get them or we do have them. That's the way I'm trying to do this. I want infrastructure stocks, types of stocks that could do very well, or parts of stocks that are part of the economy that is starting to strengthen nicely. Okay, I'm out of that. I'm done with GE. Too much time spent talking about it, but that's kind of what I would do. I would lighten up, and I maybe would take the next big bounce, and I would get out completely. You can always come back in thinking fresh, thinking, whoa, I just bought the low in GE. That's better than saying I bought GE way up here and now it's going to lower lows. It's a lot better way to do it. Just don't let this thing sit on your shoulder, wagging your finger, saying, oh, you should have done better, you should have done better. It aggravates and interferes with other trades. Okay, enough. Now, question I had was GBTC. I dealt with it a little earlier when I was with Tommy on the show. This particular area at 17.92, I would have preferred on the low of the day at 17.51. That's no big deal, 40 cents. But the reason why it's closer to the 9-period moving average of 17.21, this is Bitcoin, this is the fund. I think that the Bitcoin itself, yes, Bitcoin, the way the pattern that I'm looking at, where it takes a long time, forms a little narrow trading band, and then forms either the H pattern, this is the daily Bitcoin, trading at, I don't know how delayed it is, 10,140, having had an exact 6,000.00 low on the, what was that, the 9th? No, that was earlier. I think that was the, does it show me? On the 5th. February the 5th. So what we're looking at here, if there's going to be an arch formation, this is the best time you can get a cup formation. You want it to be trading in 2 days' time and in the 10,640s. So we go back to GBTC, and I'm going to say, yes, if you're thinking about it, I'm not sure how you would put a stop in, because you can only be stopped out during the day. But definitely, this is the time, because within 2 days, it has to be in the 1880s, and it's a 17.90 right now. So this is your best risk reward. What kind of stop would I have? Well, that's difficult to say. If you're getting a small position, perhaps you've got to give it room. Give it a room under Friday's low of 1713. So we're talking about 80 cents. Just for 2 days, give it a $1 stop. And if it goes higher, if it goes anywhere, if it closes above 18.25, the high of Friday, if it closes above that, it's at 1794, you can raise the stop a little bit, but don't raise it too much. Give it a little bit of room, but the 9-period moving average of 1721, somewhere in that area, just you have to, in the beginning, give it some room. This is the first time I'm saying, yes, you can, because of the pattern, but only if it makes if it breaks to the upside by day's end or by tomorrow. This time, I want to see it above Friday's high. If it's not, it's just stalling out. I might even say, you know what, just get out with a little bit of a profit or a little bit of a loss, and we'll try again. So next question was Boeing. Boeing, huh? Boeing trading right now in leg D. So leg C was 360.81 4 days ago. And now it's in leg D. And look, this is the smallest, peak A to peak B to peak C, and now to leg D. I suggest Boeing is getting very tired. I don't have a short or a sell or anything. I'm just saying Boeing is getting very tired, but it has gone to a leg D in the weekly chart, and that's kind of what we're waiting for. Oh, it's worth talking about this in the overall context of the market. I'll be back straight after this, bunch of other questions. Yeah, Ford, we'll talk about the autos in a moment. Dow's up to 85. Be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I had a question here, Basil. Can you take a look at F Ford to see if this is a good place to enter, have the best of days, Tim? So, Tim, I'm looking at Ford. It's at 10.78. So remember, I mentioned that for the past, maybe 2 months, maybe it's more. I don't even remember. Whenever I just had a timeout, and I just thought, you know what, I'm going to do this. I promised myself I would do it. I want to know what's going on in the auto industry, real life thing. I spent a lot of time with different dealers, went for some test drives and all. And I just wanted to see what was out there. And what I really noticed, and this is, of course, just in the Boston area, that's anecdotal, makes it very, but I don't think it's anecdotal. I got a feeling from what I'm hearing, I think this is cross-country. And you've got all these floods. Here alone in Boston, there was 600 cars wiped out in one of the floods. And it's happening right across the country. This is the best thing for the auto industry. I mean, you do nothing and you get nature does its job, and next thing, the cars get written off. I can just imagine in 3 years' time the number of cars that have been sold that have water damage and we didn't find out about. Anyway, so what I did find is that a lot of people are at dealerships. That's number one. Almost all the dealerships that I went to, odd times, I try to just do it as the craziest hours, just before closing or early in the day when I got a break. And I just said, hey, I've had enough. I just got to get out and do it. And I found that I didn't go to the really top of the line. I wanted to see Middle America. That's really what I wanted to see. So I had Toyota, Honda, Subaru, Ford, GE, Buick, just whatever I could. So what was really interesting to me is within the context of what's going on, and I discussed this earlier with Tommy Jr. in the show at 10 o'clock that I did because Tom's at the Money Show in Manhattan. I'll be doing the 4 o'clock show this afternoon as well, the wrap-up time. And Larry Pesavento is doing the 3 o'clock, so it should be interesting the last 2 hours. What I did notice was that I overheard more and more people talking about leasing. Some people were buying, quite a few people were buying older models thinking, look, I get pretty much what I want. I don't have to overpay. I like that kind of thinking. But within the context of leasing, it seems to me the one thing that was missing that I overheard, and I listen to everything I can, was that people weren't negotiating from a price to sales price. They were negotiating from what the salesmen were talking about, a monthly price. And if you wanted to do X, they would give you, instead of 36, they said, well, you can make it 42, and then you got your price, 42 months lease, or whatever it is. I'm hearing all these things. I'm saying, ooh, interesting. But what really attracted my attention was that it's all the gizmos, all the additives, the beeping on the lane departures, the overtaking, and you got your car on the side, and they all call it different things. But basically, it says don't go into the lane now because there's a car behind you. Little light goes on. Lane maneuvers that it keeps you in the lane. The stop, the braking system that allows the car 2 cars ahead to stop very quickly and allows the braking system here to pick it up and already start to slow you down. We're not waiting for the taillights of the car in front of you, which might not have got it yet. Just fascinating things, and I think for some of them they're very important. Heated seats and all that stuff, yeah. So I'm thinking that there is going to be a continuum in the buying of cars, because people are looking and they flash. You hardly ever see the price of a car anymore. You just see the lease price. And then when you read the details, you should know that by the beginning of the contract to the end of the contract, there's X amount of money they have to get. They can give you nothing down, but they're going to make it up somewhere. They can give you something down. There's always somewhere to make up that price. So within that context, I think more and more people are attracted now towards leasing, and that's going to help. So I'm looking at Ford. It's at 10.80. It's holding the 9-period moving average. It's in a rectangle formation. I'm going to say to you, it's going to take a lot for it to break out. The technicals are very good, but the price hasn't, or have improved a lot in the daily. The price hasn't done much. So at 10.80, Tim, I'm going to recommend, I know that you tend to do this as well, just get a starter position here. 10.79. Don't expect much, but it's going to give you a tremendous amount of advice. It's going to say, if I'm able to hold and then quickly move above the high that was made in the 16th of 10.82, it hopefully does it today or tomorrow, then I can go to the next level of resistance, 11.04 on the 7th of February, day after the low was made at 10.19. And I'm saying to you, I would go step by step, risk reward, because of the left side, right side price time match in the monthly chart. This whole 10.40s area, 10 area, is going to be very critical. Start a position right now at 10.79, but don't expect anything. However, if within a week and a half, if it's trading anywhere in the 11.10 or higher area, I think you've got yourself an entry point less than $1 off what could be a low, a pretty good intermediate term low. I'd only go step by step. Don't get carried away. And if it goes from 10.79, next thing you know, it's trading at 11.35, and you say, oh, I could have had a whole position. That's better than saying it's at 10.79 and it's gone down to 10.45. Oh, no. That's the way it would be very negative if it closes at this point under the 9-period moving average of 10.72. It would be very negative because it's saying the upside is still limited in time. It's not going to do it. And it's saying in price, you could even go all the way back down to the 10.19 area. So yes, start a position, and we'll follow it over the next few days. Next question I had was US Steel trading at 44.41. Now, question is the waveform. So it's gone to a leg E in the monthly, very positive. Technicals are okay, they're not great, but it's gone to a leg E, and it went above the 46.55 high of 2014, that peak C minus before it plunged to 6.80. This is good action. It's gone to a leg D. I'm calling it a D, but there are other ways that I'm going to rename this. But in the meantime, I'm calling it a D, and I'm quite satisfied to say, let's just call it a D. I don't have a problem with that in the weekly chart. But it's this single leg A that has me a little worried, and it also has me a little bit saying, whoa, if it's really an A, we could have a little bit more sideways consolidation. But at the high that was made in US Steel at 46.82 on the 20th of February, with a little minor pullback, didn't even hit the 9-period moving average, and the gap up today, up 99 cents at 44.51. I like that. I've been talking about steals for a long time. We have entry points that we'd like to get in quite a few steals. So what I'm looking at, we had Reliance Steel did great for us. Didn't get back in correctly, so we were kind of watching that one. So I'm going to say to you, yes, I like the steals. The SLX, which is the steel ETF, is in leg B at 51.60. I like it. I think it's broken out. And I tend to think that this is really a new leg to the upside in the weekly chart. I do like it. So the answer is yes, I do like the steals. We'll come back with some more questions.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. That was a 326. It's the reason why we wanted to stay long, be long, stay long, and act to longs. In my newsletter, I just got an email saying, kudos to you on GE rant. They need an outside CEO to come in and shake things up. The company needs to be broken up into smaller, more efficient companies and profitable companies. Right now, they have a CEO that is a lifer at GE. Intrinsically, I think they will go down to 11, but upside out 3 years, we should get 26. Have a good show, George. Thank you, George. Yeah, I had the same impression with the GM. She's getting all the kudos only because the media is desperate to start praising women. But actually, she's a lifer, and I don't personally think that she's done a great job wherever she is, this lady from GM. It's the same thing. Although we are long GM, and it's done very nicely for us. I mean, the 34s is the 41s right now for subscribers. But I don't know. I see Consumer Reports, and they just lambast Cadillac and all for quality. Quality is just not there. The Buick was just the leader, and then they had a year or two where they just did shoddy things. I don't understand what's going on. I have to tell you, GM should just be, instead of 41, it should be in the 55s. They have everything going for them. Made America. Some of the stylings improved a lot. Chevrolet's improved a lot, but it's not good enough. The quality, they should be the Toyota Motors of the 1980s, where everybody started to talk about quality, 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 quality. You bought the car because it had quality, and some of the looks, but mostly quality. Very disappointing. Oh, got that out the way. All right, so before we wrap up for the day, let me just mention, I like what I'm seeing. The Dow is now at 25,640s. That's the area that I wanted to see to break out. I think this is very good action. I just want to show you something very interesting. The VIX index is at 16.02. It's still very high, and that allows a little more room to the upside. And that Friday close said, people are still holding the VIX index as some kind of a measure of security. If that VIX suddenly starts to drop to the 15.30, 14.80 level, you can see new highs in the S&P and the Dow. But this is a very critical week with the Fed talk and everything, plus the interest rates I spoke about. Have a great day. I'll be back to do Tom's show at 4 o'clock.
What kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.